Hey, good afternoon, everybody, and welcome to the live stream. Market has closed, and it was a mixed day. In general, the market was fairly flat if you consider that the S&P was up just slightly, and the Nasdaq was up just a tiny bit. The Dow was down, and then the Russell was down. And when we look at what actually traded up, just a few stocks, but they really went up. Nvidia, Broadcom, AMD, Oracle, Palantir, GE. Looks like Raytheon was up. The aerospace and defense sector was up. I think there's more conflict in Europe, and specialty industrial machinery, GEV, is really pumped up because the data center just keeps getting a lot of investment, a lot of attention. Caterpillar was up. Energy, oil prices were up. And then utilities were also up. That's pretty good. And so this week's been, you got to know or pick the right stocks. And if you're in the right stocks, you had a really good day. Not in the right stocks, not so much. Looks like we have somebody from Barcelona, Nico Rucon. Thanks for joining. I hope it is a very nice day in Barcelona. I appreciate you spending part of your late evening. So thanks for joining. And what I wanted to do in this live stream is kind of, just look at stocks. Some opening comments are that the stock market is expensive. I wouldn't be surprised if we sell off because a few stocks are making this market go up. But overall, it's about buying stocks that are discounted, buying them under the right conditions, and then waiting for those stocks to appreciate over time. Buying a good business, but then buying it at the right price with a good discount. If you look at the most valuable companies, NVIDIA had a very good day. And NVIDIA is so big, it moved a good part of the index. Microsoft had a decent day. Apple was down. Google was down. Amazon was down quite a bit. We'll take a look at Amazon. I wonder why it was down so much. Meta was down quite a bit. Avgo was up. Tesla was up a little bit. And then Berkshire was down. So we'll take a look at Amazon. We'll take a look at Meta. I also wanted to look at eToro, gambling.com, Monday, Pinterest, Root, which does insurance, PayPal, and Intuit. Those are the stocks that I had in mind. But I'd love to review some stocks that you want to look at. The rules of engagement there are, if you're a member, feel free to put stock tickers in the chat. I will take a look at them. If you're not a member, a $5 super chat or become a member. It's very easy. Visit the home screen of my channel. There's a join button. You can get all set up. So today we didn't have much earnings. We had a couple companies. Chewy was out there, and I'm not a big Chewy investor, so I'm not going to cover that. Tomorrow we have Adobe, which is going to be a pretty substantial earnings. So I'll be covering that tomorrow. I'll also be covering Kroger, and this is before the market opens. So Kroger will be something I cover. I own Kroger, so I'd like to take a look at it. Restoration Hardware. Then if you're a footballer, Manchester United is going to announce tomorrow. So you footballers, if you want to see how Manchester United is doing from a financial perspective, you got it. There you go. You can be a part owner in that club. You could also be a part owner in the Atlanta Braves, by the way, for all you baseball fans. So that's what's going on with earnings. Earnings have slowed down quite a bit from a couple weeks ago. Boy, we were just on a tear. So let's get into looking at stocks, my favorite part. And I'm available to answer questions or, again, review stocks that you want to look at. Take a look at that member program if you'd like to become a member, and then put in a stock that you'd like me to take a look at. Let's get started with eToro. eToro, the reason I like eToro is it's in an industry that's been doing really well. If you consider that Robinhood, Interactive Brokers, Charles Schwab are doing fantastic. And over in Asia, Futu is doing great. Those stocks are really, really performing well. So I thought, eToro, since they tend to service the European market, specifically UK, quite well, would be a really good idea. They are engaged in trading and they support investing in equities, assets, commodities. And from what I gathered, they're predominantly in Europe. They're headquartered in Israel. Their market cap is 3.57 billion. They haven't been traded for a long time. They IPO'd May 14th. That's not very long ago. And right now, I mean, needless to say, there's a lot of investing. Stocks are really getting people's attention. People that are savers around the world are probably looking for the best yield they can have on their capital, on their savings. And stock investing is a good idea for them. So this company here serves a region of the world that I'd like to cover. I already own Robinhood. I already own Futu. And this one was an idea in Europe. The market cap, 3.57. I think I went over that. Let's take a look at these PE ratios. Really low, 5.91, excuse me. That's really, really low. Low PEs like this are really, really surprising. Forward P, 18.57. Analysts think this is really discounted. When I look at the growth of this company, they are growing quite well. And that's not a big surprise because a lot of people are investing. They are seeing the returns on NVIDIA, Broadcom, you name it. Even, big caps, small caps are doing really, really well. So I think more and more people want to open accounts, fund those accounts, and start trading. Can't blame them. That's why I'm here. I like investing in stocks. I like having my capital grow at fast rates. So I'm sure other people want to do the same, especially in Europe. So this company is growing really, really well in that part of the world. And when we look at their cash flow, they cash flow quite well. They're profitable. So those things look good. Now let's take a look at the forecast. We've got 12 analysts that cover eToro, and they all think the stock should be priced higher. The lowest price target is 57, the highest one, 85. So that's interesting that analysts are looking at the numbers saying, why is this discounted? It should be priced higher. This particular year, 2025, for some reason, they're expecting that they're going to slow down a bit. And I'm going to go back and look at the quarterly to see if maybe I missed something. But then it's going to continue to grow at a more modest rate, but growth in itself. They're going to be about $1 billion revenue company in 2 years. Their earnings per share should rise modestly. So their PE is going to look good. It's going to look good if they're profitable, growing. Looks like a good PE. So let me return back and see if maybe I missed something in the quarterly. Let's take a look. Now they keep growing quarter after quarter. So I'm not sure what stock analysis is looking at with regard to that negative growth in the current year. All right, so we saw the numbers. The balance sheet, I believe, is a good balance sheet. Let's make sure that the balance sheet is good. We got 987 million in debt, cash, and debt is $51 million. So lots of cash, almost no debt. That looks good. So overall, eToro, I like the business because I've been really successful with Robinhood, Futu. So I'm trying to use the same logic and now cover Europe. And this one here hasn't had a terrific month. It's been down 26%, and year to date's down 18% 1 year. And it's not really a year because they IPO'd May 14th. It's down 18% from the time they IPO'd. So is this stock going to rally? Not quite sure, but let's see if it's discounted. So I am going to look for eToro in my valuation sheet. Now with eToro, I've been conservative in going with a higher discount rate. So that way I get a greater rate of return since I am investing in a company outside my home country. And when I value the company, I have very good cash flows coming out of the company. It looks good. And those cash flows, I'm going to grow by 35% because that's just like their industry. It doesn't take very much to run these types of companies. It's a platform. The more trading that investors conduct, the more money eToro will make. And if we keep driving on the current levels of investing in stocks, these companies are just going to flourish. So I think the cash flow is going to be quite attractive going forward. Maybe I'll tone it down a little bit, maybe down to 25% growth, and long-term growth, 5%. That is fine because they're small. They should be able to grow real well. Cash, 987. So the future cash that this company is going to produce is much higher than their current stock price. And it's discounted by 68% if I compare the intrinsic value of future cash flows compared to the current stock price. That's a very compelling discount. And again, it's using a discount rate of 11%. The earnings per share drives a similar discount if I use a PE of 36. Now they are growing. They're in a desirable industry. Like Robinhood has a much higher PE. Futu has a higher PE. This one, I think, deserves a similar PE if they're in the same business. Growing their earnings per share by 10%, we get a 57% discount. So this is a nicely discounted stock, in my opinion, and one that I've started a small position in, and I'm just kind of monitoring it. I don't want to dive in, head first with a bunch of capital into it. I want to start investing in it, follow it, see another earnings, see if I want to invest more. When is their next earnings going to happen? Let's see here. We just had one on August 12th. So that means if we add 3 months, we're going to be at November 12th, 2025. So probably after that earnings, I could see, is this a stock that I want to put more capital into? Today was a down day for a lot of stocks. It's not just eToro that was down. A lot of stocks were down. And in the after hours, it's actually going up a little bit. We'll see where we trade tomorrow. So eToro looks like a good opportunity. Good fundamentals. Market isn't rallying around the stock just yet. We'll see if they do. So that's eToro. All right, so let's talk about gambling.com. Now, football season started. I'm a football fan. Really enjoyed the games that were played last weekend. Looking forward to the games that are going to be played this weekend. And gambling.com doesn't take any bets. They just help gamblers with good information. They're a little bit like Facebook, where as people visit gambling.com, they advertise on the site. That's how they monetize the traffic that's going to their site. And it's a small cap, $283 million, and their revenue is 147 million. PE is 20. Forward P is 9.2. A strong buy with a huge discount, according to analysts. Now, this company has been around for a couple of years. They've been publicly traded, but more recently, they've really sold off. And what's interesting is you have a big sell-off in a stock, but when we look at the financials, you see a company that continues to grow year after year. And they're going in a market where, gambling continues to get more and more popular. Sports betting on things, it's just really popular. People like to do it. I'm not a big gambler, but I have lots of friends that enjoy placing bets on games and so forth. So I think there's a pretty fertile market out there for gambling information. People trying to get an edge. Maybe they want to win their fantasy football league. So they go to gambling.com to try to get more information on which players they had to put on their fantasy football team. Things like that. I think it's fun for them, and gambling.com really provides really good information. So the growth is really good. Looking at the quarterly looks good, 29.64, 39%. So those numbers look really, really good. And we're getting into football season. So I would expect that the next quarter that is going to end at the end of September is going to show a bump for that football schedule starting. Because football is huge here in the United States, American football. Now, looking down, a couple other things around gambling.com. You see that they've always been a cash flow company because they just run a platform. It's not like they're, having to have a factory and buying all kinds of equipment and so forth. No, they just run a platform. They probably run it on one of these hyperscalers like AWS or Azure. That said, they get to produce a lot of cash. They have really nice gross margins, 94%, and really nice profit margins overall. For the full year, they're at 24%, 9.66%. They're probably advertising a lot, trying to put some more eyeballs on their website, getting ready for football season. So those numbers look really good. And I think a really good opportunity. Again, I'm not a gambler, but I get that people really enjoy gambling. They enjoy putting, money on games or whatever it be. And, they can have fun doing that. Analysts, 8 of them cover this stock. They think it's really, really discounted. So they're seeing the same fundamentals I'm seeing. And the best price target out there, the highest one is at $19 a share, lowest one, $11. So this stock, if it could just do half of that, price target, that'd be pretty good. It'd be a nice 45, 46% increase. The company is expected to continue to grow. So that looks really good. We got top line growth. Top line growth tells me customers like gambling.com. They're visiting it more so they can advertise to those visitors and charge other companies that are trying to advertise on their website. And if they're going to be growing this year by 38% and then 12%, that's going to be great. They're going to keep adding on top line revenue, making themselves bigger and creating more profit, more cash flow. Their earnings per share is really going to expand fast too. It's going from 60 cents to $1.09 to $1.41. That looks fantastic. See their PE dropping. If their PE drops like this while they're growing, it's just going to be a real good opportunity to jump into this stock. For me, I'm in the stock already. Again, another small position. I like the company. I think the company's terrific. I like the idea. Now let's take a look at the valuation for gambling. And the valuation is similar to what the analysts are saying. Based on cash flow, this thing's discounted by 76%. The cash they're going to produce, and if they keep growing it, it's just going to be worth quite a bit in the future. It's worth $1.25 billion. Add cash, take away debt. The market cap is well below the intrinsic value of cash flows by 76%. And over time, the stock price will revert to its intrinsic value, the value of the cash flows that a company produces, as well as the profits they produce. So it looks really interesting. I agree with the analyst that it's discounted at these levels. My 78% discount on using earnings per share is very similar to theirs. So I'm in agreement that the stock is discounted. So this is a nice opportunity. This is a small cap. Small caps are riskier, which is why I'm using a discount rate of 10%. Instead of a larger company, I would be using a discount rate of like 8%. And in this one here, I've got a nice starter investment. Just, I'd like to see them operate through this quarter. I want to see how well the football season is getting started. And keep in mind, the football season started here in beginning of September. And it really gets going in October, November, December. A lot of games, a lot of gambling. I'm sure a lot of eyeballs are going to come to gambling.com. So I think the final quarter of this calendar year is going to be a good one for this company. I'll be looking at their earnings to see how they perform and looking forward to it. So that's gambling.com. We've just gone over 2 small caps, eToro and gambling. It looks like we've got 34 people on the stream. Thanks everybody for joining. We are looking at stocks and just seeing what's out there. I had a list of stocks that I wanted to go over. The next one's going to be Amazon, but I'd be happy to look at a stock that you're interested in. If you're a member, pop it in the chat. We'll take a look at it, put in the symbol or the name of the company. If you're not a member and want me to look at a stock, just $5 super chat, and then I can review that stock. Or become a member. It's easy. Just go to the home screen of my channel, look for the join button, and you'll be all set. Let's move on to Amazon. So Amazon had a pretty rough day, and I think it's because other hyperscalers are succeeding, most notably Oracle. And if you recall, Microsoft was also had a very good earnings. And it seems that, Amazon is the biggest public cloud infrastructure company in the market. They're bigger than everybody else. And Microsoft had very good earnings. They had very good growth rate. Oracle had very good growth rate. And even Google Cloud, they grew really, really well. Alibaba grew at 26%, their cloud business, which is really good. So I think that the market's thinking, well, Amazon's kind of losing their big market dominance. They have more competition, and most definitely they do. But I think it's overplayed to count Amazon out. It's a terrific company that's really well diversified. They're number one in e-commerce by a wide margin. Nobody's even close. And they're very, very successful there. And I think on their cloud business, their cloud infrastructure business, they're very good at that. They're the biggest, and I think they aim to stay that way. So I'm not betting against Amazon. I'm actually believing that they're going to find a way forward, and they're going to be very good. They also have other businesses that I'm not counting in that mix. They have a media business, a streaming business. They even have a robo-taxi business, Zoox, that is live in Las Vegas. So they have a lot of ideas that are coming to market. And I would not count Amazon out. I think they're a terrific, terrific business. Overall, Amazon, and let's see if there's any stories out there. So AR glasses for Amazon. And they launched their Waymo rival, which is the robo-taxi. And here is the Zoox robo-taxi. And this is an interesting way to design a car. Try to fast forward to the car itself. They actually designed it as a carriage. This thing will go in any direction. It never goes backwards because it could go in either direction. And it's live. You can see the map where it's live. It's live on the strip. I'm not sure if it goes to the airport, but you can get from place to place using Zoox. I like how they branded, the pickup spots and so forth. That's a really good idea. They also have like regular cars with the Zoox technology. I saw one in Austin, Texas, and I did a double take because I know what the Waymos look like, and the Zoox have kind of a different equipment look to them. It looks like a bicycle rack with some extra cameras. And I noticed that Zoox is training their cars in Austin in order for it to be live in Austin at some point. So their robo-taxi business is real. They're getting going with that. So that's more on how Amazon is really diversified. They are a streaming company, Amazon Prime Video. So you can watch that. You can watch tomorrow's football game on Amazon Prime. So they're everywhere. They have very good businesses. So I'm not quite sure why the market would sell Amazon off. And this year, Amazon hasn't done all that great. It's only up 5%. And for the 1 year, it's up 31, 5 year, up only 41%. This business is like really, really dominant. They are a huge revenue business, $670 billion. Market cap, 2.46 trillion. PE of 35, forward PE of 33. Strong buy with a 13% discount. Even though they're a humongous business, 670 billion, they're still growing by nearly 11%. That's huge growth. That's like $70 billion of top line revenue added each year. That's impressive. And that business, let's see what their margins look like. Gross margins of around 50%, just shy of 50%. Profit margins of 10%. On a massive business like that, 10% ends up being close to $70 billion of profit. And cash flow is lower in the trailing 12 months because Amazon's putting a lot of capital into both their warehouses and they're putting a lot of capital into the cloud business as they scale up for AI and other workloads that customers want in their cloud operations. So Amazon, they're not the most profitable company, but they're just so darn big that they just drive a lot of profit and cash flow measured in dollars. What are analysts saying about Amazon? 45 of them cover Amazon. And they are split on a price target. One analyst is at $305 a share. That's the most optimistic analyst. The most pessimistic analyst, $195. On average, I think consensus is it should be priced at $261 a share, which would be a nice little bump of 13%. Now, the analysts that cover this stock are saying 24 of them are a strong buy. Can't argue with that because Amazon's such an important business. E-commerce, they're dominant. Cloud business, they're the biggest. They're a streamer. They are involved in technologies like robotaxi, and they have other things in the works like Anthropic. Amazon's a big player in Anthropic. I believe they own a fraction of Anthropic. I don't know if it's 25%, 50%, but they're a big player in Anthropic. So if Anthropic is successful with their large language model, Amazon owns part of them. So that'll be good for them. So strong buys, 23, buys, 21, one hold, and no sells. So analysts are very positive on the company. I am as well. They just believe this is a really strong business. And one thing Amazon will do is they will sacrifice short-term performance to have the best long-term strategy. They most definitely will do that. Looks like Big House Juice is on. How are you this evening? Thanks for joining. Thanks for being a member. Let me know if you want me to look at a stock or if you have a question. Great to have you. So Amazon will sacrifice short-term results to have a stronger business for the future, a business that is just going to have greater market share, deliver greater value to their customer. They have very good values over at Amazon. The culture is one where they just want to continue to get stronger and stronger and stronger. And at times, like currently, they're putting a lot of capital back into the business. The numbers don't look as great. But overall, we know Amazon is just going to be, it's already the biggest revenue company in the US, and they're just going to continue to dominate in their markets, their e-commerce market. On the cloud business, I think they're loaded. They should do well. So I've got a request for a stock, CMG. Got it. We'll cover that. Big House Juice. And I see Saeed is on. Saeed, I wanted you to know that I covered eToro as the first stock coming out of the coming into the stream. So if you see the recording, you can take a look at that. And I could also kind of do a quick review later on. And looks like Big House, you also are interested in IMMR. Glad to take a look at it. And I will come back to eToro, Saeed, in case you missed it. All right. So the numbers on Amazon, we're in fiscal year 2025. And the revenue is going to be, according to analyst consensus, 72 of them are weighing in. So that's a lot of analysts saying this is where we think the company's going to land. They're going to be a $723 billion revenue company at the end of this year. They're going to be growing by 13%. That's massive. And they're going to have an earnings per share of $6.81. So their P will be 33.83. Next year, they're going to keep growing. They're going to be $797 billion of revenue, growing by 10.27%, and their earnings per share will grow a little faster. That looks good. They just keep growing. They keep growing, and they're going to be a $1 trillion revenue business in about 3-4 years. That will be incredible. It might be the first $1 trillion revenue business that we see traded on the exchange. You see their growth rate is nice and consistent. Just shows that this business is built to last. It's built to be a good business into the future. I don't know that anybody doubts that Amazon is going to be a player in the future. So that looks terrific. All right. The balance sheet has a little more debt this go around because they're putting money into that data center. So when we look at their debt, they got $159 billion of debt, $93 billion of cash. That's because they're building out the data center. They have a lot of EBITDA, so they can pay off debt quite well. Debt to EBITDA 1.07. They can pay off debt in a little over a year. So the balance sheet's fine. They're just temporarily having to build out that data center. So what do I think Amazon is worth? Let me show that to you. All right. So right now, as I speak, I think the company is trading close to its fair value based on cash flow valuation. And the reason why their cash valuation has gone down a little bit is the current year they've invested a lot in the data center. And that's why I've reduced my forecast for cash over the next 12 months. But they'll get back to producing really good cash flows. And I really have a forecast where cash flows will grow nicely going forward. And overall, I think that they're fairly priced when it comes to the value of the company based on their cash flows in the future. Earnings per share does drive a nice discount of 25%. Collectively, I'm at 11%. So I'm pretty close to what those analysts were saying. They were saying about 13% discount. I'm at 11. And for me, such a desirable business with a big moat like Amazon, I'd be willing to pay a fair price for it. So at an 11% discount, I'm a buyer. I'm a buyer of Amazon. I own Amazon. I keep buying Amazon shares. I bought more Amazon shares today when the stock dipped like that. I'll take a nice 3% down day. I'll add shares to my portfolio of Amazon. Amazon's a terrific business. I think they're going to do great in the future. And while I'm covering Amazon, their cloud business. AWS is their cloud business. It produces $123.6 billion of revenue each year. It's growing at 17%, and it has 41.5% market share, just in the share that AWS, Azure, and GCP have. Microsoft, their business, branded as Azure, has $19.6 billion of revenue, it's growing at 26%. It has 40.2% of the share between the three. And Google Cloud is the smallest. It's growing at the fastest rate, and it has 18.3% of the share between or among these three big players. So AWS continues to be the big guy, and I wouldn't be surprised if they accelerate their growth. I think Amazon is really focused on really stepping up there, and we'll see. We'll see how they grow the next time they announce earnings, and I'm looking forward to that day. So that is Amazon. Terrific business. Let's get back to us. Let's go to a stock that a viewer wants to see, and that's CMG. Chipotle. Let's talk about burritos and burrito bowls. And my go-to at Chipotle is a chicken burrito. Sometimes I go veggie burrito with white rice, black beans. Give me those fajita veggies. Give me the spicy sauce. That stuff can really burn a hole in my tongue sometimes. Put some lettuce on there. And if I go veggie, I put in some wok, please. And I'm good to go. And I'm a happy camper. And that's my Chipotle order, by the way. But we're not here to talk about what I like to eat at Chipotle. We're here to see if Chipotle is a good investment. This was a question from Big House Juice. Yeah, I'm making myself hungry too, Big House Juice. I better stop thinking about the food and let's get into financials. Market cap, 51.93. Now, this business has had better days. They had a nice rise. They came out of 2022 and really went up nicely from $30 a share up. They doubled in price. And they had a CEO that got a lot of credit for their success leave, and he is now with Starbucks. And over the last year and a couple months, they are down. They're down from 64 a share down to 38. Now, Chipotle, there's some things that I like about their operation. They don't have a big giant menu. It's not like, hey, we're going to cook 100 different types of meals, right? From spaghetti to tacos to steaks to salads and all kinds of stuff. They have a pretty narrow menu. That's smart. I think that'll help them be focused and profitable. I also like that they have a good brand for in generally. Every time I go to Chipotle, these restaurants are crowded and their footprint is very well thought out. They have a footprint. People come in, they order their food, they walk away from the counter with their food, and they're good to go. They also charge a pretty, I would say a reasonable price, but I think it's $11, $12 for a burrito in the US. And if you add like wok, I think it adds $1 or $2. So I think it's priced all right. Okay, so market cap is, let's call it 52 billion, revenue 11.5 billion. They have a P of 34, forward P of 29. That seems a little high. This is a restaurant. We're going to look at the margins when we get to margins, and you'll see that restaurants do have lower margins. Analysts think it's discounted. Okay. Now let's take a look at their financials. So they've been growing. They've been growing, and the growth has been slowing. And the growth rate in the last quarter was at 3%, which I think that's what's causing a lot of the concerns. Like, whoa, hey, are you going to become a no grower? And that would be unfortunate. They had really good growth for a while. That looks good. And their gross profit looks like they're going to be like 40% gross profits. So let's look at their gross profits, net profits, and so forth, because I think that's where there's more to be analyzed. So I like where their cash flow is going. So cash flow is at $1,466,000,000. Looks good. Their gross margin is 40%. Okay, no problem there. Profit margin of 13. I like that number. So the sales growth, needless to say, that's a concern. You're slowing down. Got it. Got to start growing again. If you can figure out how to grow. The profit margin, though, is not a problem. It's actually been expanding. If you look at 2022, is at 10.41%, and now we're up to 13. That's a good thing. So they're becoming more profitable. Okay. That looks good. Let's take a look at the balance sheet, and then we're going to see what analysts have to say about Chipotle. Cash, $1.55 billion. And debt, 4.78. Pretty sure that's not going to be a problem. We don't want that to be more than 3 when we compare debt to EBITDA. 1.6. We're good. So forecast, analysts, 26 of them. So these analysts think highly of Chipotle. They think it should be priced higher by 54% if we look at their consensus. If we look at what these analysts are saying, 8 of them say strong buy, 5 holds. All right. Now let's take a look at their forecast. So a lot of analysts are weighing in. A lot of analysts are adding their 2 cents in here. Okay. And analysts this year think it's still going to grow about 8.47. Not bad. Then they're going to get back to growing. If this forecast is accurate, if this actually happens, this stock's going to move up because the market's going to be like, whoa, hold on a second. They increased their profits. They're increasing their top line. And look what's happening in the earnings per share. It's going from 123 up to $2.01. So this looks really, really good. This forecast looks really good. I'm liking what I'm seeing with regards to earnings per share and how they're going to be growing it. So I'm going to note earnings per share because we're going to build a valuation around Chipotle. All right. There's one last piece of information I need. How many shares are outstanding? 1,340,000,000 shares. Okay. All right. So let's take a look at Chipotle and dissect kind of like what are these cash flows worth, and try to keep the growth rates and the condition of the business. Like what I like about having information from other analysts is we need to make qualitative decisions as we analyze companies. And when they weigh in and say, this is what we think the company is going to grow by, it's going to affect my decision-making as I make a decision of how am I going to grow cash flows? How am I going to grow profits? How am I going to grow this business when I put together my valuation, my model? So keep that fresh on your mind. This thing's going to start growing at 12%, close to 12%, then 14%. Okay, so I don't have a lot of restaurants in here. What restaurant? Anything that resembles a restaurant? No. I've got all this tech and communication services. Lululemon, Levi's, Tesla. I'm just going to have to pick one. Let's pick Copart. All right. All right. So what we're going to do is we're going to value Chipotle by setting up a forecast of their cash flows. We're going to discount those cash flows to today's value. We're also going to value the company by looking at the value of their earnings per share. And then we're going to blend the two, or I like to blend the two. That way I have a more holistic view of their value. So this is a little riskier business. They have a little bit of debt. They've got a lot of restaurants, a lot of employees. If you remember, they had on their fresh lettuce, they had E. coli poisoning. This is like 10 years ago, maybe 15. That's the kind of stuff that happens in restaurants, right? And if something like that happens, obviously it's a bad thing. So I'm going to increase my discount rate because I think it's a little bit riskier of a business. All right. So the trailing 12 months of free cash flow is $1,466,000,000. Now, right now, that's being grown by 10%. That's not a bad growth rate, considering that the company is going to continue to grow around those rates. And Kurt, thank you so much for the super chat. We're going to get to AMPX. Hang with me. I'd like to finish my thoughts on Chipotle. Thank you, sir. All right. So we got 10% growth. We saw that the forecast for Chipotle, 12, close to 12, 14. So 10 is appropriate. I think they can do 10%. It's not being overly optimistic and then just driving up the price of the stock. 4% is good on the long-term growth. So we have intrinsic value of $39 billion. And we've got cash on the balance sheet of $1,550,000,000. And we've got debt of $4,780,000,000. Shares outstanding, we've got 1,340,000,000 shares outstanding. So right now, based on cash flow, the Chipotle business is priced at a premium. The stock price is 31% too high compared to the value of those cash flows. Can cash be higher? It could. I don't think it will be, because when we looked at the financials, one thing I noticed was that they're actually on an upswing of cash, right? You see how they were at 2021, 839, 844, 1.2 billion, 1.5, and then 1.46. So this is already kind of near the all-time high of per year free cash flow. So I don't think I'm underrepresenting free cash flow. And when I discount it, again, I'm discounting it by a little bit higher discount, 8.5%. I'm getting to a 31% premium. All right, let's handle earnings per share now. Earnings per share, and I'm using 2026 earnings per share. I think it represents what's going to happen over the next 12 months better. And Chipotle is a well-known brand. They're probably going to grow that by 12%. So they're fairly priced according to a discount formula of earnings per share. And here it is. So they're fairly priced here, priced too high based on cash flows. I blend the two, and there's greater weight put on free cash flow. I think that Chipotle is priced 21% too high. So to me, this is a pass. Restaurants are not my favorite investment, but if the right conditions are in place, I like Chipotle. I like their format. I don't like sit down restaurants that have lots of employees, lots of menu items. I like simple. Like, I'm actually wearing an In-N-Out Burger t-shirt. And if you're in Southern California or California, you know what In-N-Out Burger is. And I love their menu. Their menu is simple. Hamburgers, fries, shakes, Cokes. They have a secret menu. And they've been wildly successful. Chipotle isn't quite that simple, but they do have kind of a very simple format for the restaurant. And I like that. But you got to get me a discount. On Chipotle, I would be a buyer if they offered me a nice 30% discount, because I do like the brand. So that's my conclusion on Chipotle, Big House Juice. There you have it, sir. And I will lock this in my watch list. And we're going to move on to the next one. Thanks, everybody, for joining. It is great to be with you talking about stocks on a Wednesday afternoon, trying to figure out how can we make the right trades for the rest of the week. Bear with me for 1 second. Once I get this done, we will go back to analyzing stocks. I just like to make sure I come back and update this information later. All right, next one up, we've got a super chat, and we're going to look at AMPX. And after that, we've got IMMR. So AMPX. And all right, animal style, exactly. If you go to In-N-Out Burger now, I don't go animal style. I'm too old, and I got to watch my calories. I just go with a double hamburger, order fries, glass of water, and eat like a king. All right, so let's get on to AMPX. What are we dealing with here? Let's take a look. This is a super chat sponsored by Kurt Gardner. I think you've been on the channel before, sir. I think I've seen your name before. And in any case, thanks for tuning in and asking about Amprius Technologies. What do these guys do? Amprius Technologies, Inc. develops, manufactures, markets lithium-ion batteries for mobility applications. The company offers silicon anode lithium-ion batteries under the SI Core and SI Max product platforms. So they're batteries. Classified as industrials. Let's take a look at their website. Get our heads around where their product is being installed. So here's the batteries. Drones. So a couple of drones are using them. Okay. And what's up with the car? They're putting their batteries in cars. So trusted over 100 partners. So we've got an aerospace company. I saw Aero Environment up there, U.S. Army, Airbus. So maybe they're putting batteries in aircraft. There's Aero Environment. Okay, I understand that. Okay. So, and I guess they do high energy density batteries at scale. Okay. All right. All right. We got our heads around this business. The reason I like, investing, there's a lot of decisions that are very qualitative, kind of, you need to make a lot of judgment calls. And I like to get my head around what's their business? Is this business expected to grow? And the answer for this company is yes. There's going to be more drones in the future. There's going to be more items that are powered by batteries. I mean, everything is so darn convenient nowadays. And I think their product, which is the battery, is going to continue to be designed into more and more products. So I think these guys are going to grow nicely in the future. All right, so we got our heads around the business. Now let's get into financials, fundamentals, and see where this company has been. Nice small cap. I like small caps. $921 million market cap. Revenue is $44.8 million. So it's a small company. They're not making money. Not a showstopper. Let's keep going. Strong buy, 72% discount. Year to date, whoa. Up, man, 876%. Wow. And look at that. Over the 5-year, they came out with a lot of fanfare and sold off. They came out and said, hey, we're going to do great with batteries. then the market's like, well, show me fundamentals, and they could not show them. And I'm sure they've had some earnings along the way. They're going to announce on November 6th, which if I back out 3 months, August 6th was around their last earnings. And what happened here? What happened in May that made them just take off from $2.90 up to $7? Something happened there. We're going to look at their investor page in a few minutes, because I'd like to kind of see what the press releases have been. Maybe at this point, a large manufacturer designed them, kind of qualified them into one of their products and said, hey, we're going to get all the batteries from Amprius for this particular installation or product. Okay. So high level looks interesting. So these guys, they're ramping up. The growth is tremendous. They're just small. 44 million isn't a whole lot. And their cost of revenue is higher than the revenue itself. So right now, the materials, the direct materials, direct labor, direct burden, probably even some shipping cost, are higher than the revenue. So they're going to have to scale up, and they're going to have to get more efficient in their manufacturing process. And they're probably outsourcing the manufacturing. It's hard to manufacture. And where are these guys located? They're in Fremont, California. I am 99.99% sure they are not manufacturing batteries in Fremont, California. They are manufacturing these batteries probably in China, because manufacturing batteries, it's a very toxic process. So they're going to have to get better at manufacturing those batteries or increase price, so that way their revenue can be much higher than their cost of revenue. All right. So we're not going to get any positive numbers here. So we're going to have to put our thinking hats on. They don't have any margins because it's just not there. Okay. So I'm going to open up their investor page. Let's see here. Here we go. Investor relations. See if they have more information that gives me a better sense of their business. Okay, so let's take a look at their investor presentation. So they were founded in 2008. Okay. IPO'd. All right. So this is their performance. They can charge quickly, high density. Okay. So here's their revenue forecast. Okay. We are here. They're at 15 million. Okay. 320 customers. International shipments. Okay. Here they're talking about why they designed the way they did. Okay. Here's your applications. Okay. So well thought out. And a lot of companies that want to use their batteries are coming out and partnering with them. Okay. All right. So let's take a look at the forecast. So there are 6 analysts that are covering this company, and they all believe that it should be priced higher, and they believe that it's discounted by 72%. 3 strong buys, 4 buys. Let's take a look at the forecast. This is interesting. Okay. So we have these analysts that have studied their numbers and their projections. The current year, they're going to be about 66 million in revenue. Okay. The next year, they're going to be almost triple that number. And then their growth is going to slow and kind of stabilize around 240, $250 million in revenue. They're still not going to be profitable. Okay. So this company, for me, it's very risky, and I don't know that it's a good investment. The stock is really bid up. It looks like their ability to start producing batteries was met with a lot of enthusiasm, but we're still not at a very high stock price, $7.37. This stock was at, let's call it $10 a share, and it really came down. When they showed that, hey, we're actually going to get a product to market, the market really became enthusiastic about the stock. That's good. But I'm trying to figure out how much cash and how much profit will these guys deliver in the future. And I can't even get my head around what is their margin going to be in the future. I don't know. Right now, the margin is negative on the gross margin, if you look at product cost. So it's very hard to gauge that. Now, the market for the last couple months has not been willing to move this stock price higher. So I think this stock needs to release maybe a couple more earnings, maybe a year of earnings, and then we need to see data. And we need to see that this number improves. As this number gets bigger, the percentage of cost of revenue, this cannot be over 100% of revenue. You will go bankrupt. I don't care how good your product is. You have to increase your price and you have to lower your production cost. That has to happen. You don't do that, you're done. That number is kind of hard to digest. I don't see this situation all that often. It is a startup. It's a newer company. Okay, I get that. But you see that I would never buy a business that in essence is selling a product for $44 and it costs $53 to make the product. That's before I pay my lease bill, electricity, HR, finance, attorneys, everything that's involved in running a business. So I would say that I'd have to wait like a year. And then once I see these numbers get better, then I might be a buyer. For now, I'd have to go with a hard pass on Amprius for those reasons. And I think if investors, if you really believe in the company, it would be a speculation, but you're like, no way, these guys are going to get installed in more product. And I think the stock's going to go to $25 a share. That's purely a qualitative decision. You're taking in information and you're making that decision. I can't argue with it. Me, I like to have process around fundamentals, financials, free cash flows, profit. For this company, I don't have any of those. I'm also trying to be qualitative. And when I look at this business and say, okay, the market isn't going any higher. They're not showing the margins that they're going to be, let's say 5 years from now. They're finally profitable. I expect they're going to be a 30, 40% margin business, maybe higher to 50, but no higher than that, because this is a product. It's a physical, tangible product that they have to invest into materials, manufacturing, to get that product physically delivered to customers. So thanks for asking about Amprius. Man, this one is a very unique business. I hope they make it. I think they can probably make it. It seems like they designed a battery that works for a lot of products. Hope you found it interesting. Yeah, I could have sworn I recognized your name. You did ask about Fairfax. I remember that. All right, so I clicked on the wrong one. So thank you, Kirk, for asking about Amprius. Okay, so let's move to the next one. So Open Door is up 30%. Interesting. All right, so next stock we're going to look at. Before I go to IMMR, let me just do a quick little recap for Saeed. The stock is rising a little bit in after hours, but as I went through, this is a small cap company. eToro is a brokerage company. The primary market is Europe, where people set up accounts on eToro, trade stocks, and so forth. I'm following a pattern that's really worked with me, investing in Robinhood, investing in Futu, looking at interactive brokers that's flourished. Charles Schwab has flourished. No big secret. A lot of people are investing in stocks and going to platforms to do those trades. So I thought that recipe's really worked, and I started investing in eToro. Not a giant amount of capital, just a good portion of capital. The business is growing nicely. More than nicely, it's growing quite well. And they are expected to slow down a bit, but I don't quite agree with this forecast that they have. This number doesn't make any sense. They're growing much better than that. And forward, I think this could be better. So we'll see how things play out. When I look at the valuation for eToro, I have a nicely discounted stock, 65% discount. Now, when will the stock, rally to try to get to its intrinsic value? That we never know. It could take a year, it could take longer, or it could be quick. Robinhood really rallied fast. So has Futu, Interactive Brokers, Charles Schwab. So I'm thinking that this is the same business. This is the same type of business. And I'm thinking that at some point it'll begin to rally, especially around their earnings. So for me, it's a small investment. I'm going to wait until they announce again before I make a decision to put more capital to work, or if they have a bad earnings, removing my capital out of this particular stock. So that's eToro. I know you asked over email, and I wanted to cover that real quick. All right, let's get back to, from here, we're going to move over to IMMR. Another request, Immersion Corporation. So Immersion Corporation, we've gone over this one before. These guys engage in a business of intellectual property that engages users' sense of touch when operating digital devices in North America, Europe, Asia. The company offers software and related tools and technical assistance related to integrating its patented technology, educational content, and general merchandise, and digital and physical textbooks through its bookstore locations. Okay, let's take a look at their website. So the digital experience is better with haptic technology. Okay. So they get installed in other products like this game controller, your phone, your car, to give you a sense of feel, I guess. So, World of Touch. Okay, so they're getting designed into products to make those products better. Got it. So they're a technology device company. It's not a semiconductor. It's. I wonder how they're classified. They're a software application technology. Okay. So this is a small cap, 221 million, revenue of 163 million, super low PE of 3.4, strong buy, highly discounted. So this is a low stock price stock. They've been selling off this year. The 1 year they've sold off by almost 24%, nothing on the 5 year. Okay, so let's take a look at their growth. Whoa, so what's going on here? So they were growing a little bit. There was kind of they had a growth spurt, came back down, and more recently have really begun to grow. That's interesting. So sometimes, stock analysis is a little bit off. And when the numbers are that big, I want to check their actual financials that they're going to produce. And we'll take a look at the growth on their financials. All right, so investor relations. So when was on the last financials? See, it's September 11th. So these guys are going to announce tomorrow. So that means they announced June 11th was the time they announced before this go around. Okay. So bear with you. I'm trying to get to their financials. They took me over to this is a website where all publicly traded companies have to report to the Securities and Exchange Commission. And then they're just taking me there and I have to find it within that site. So let's see. That is, I think, what I was in before. So that is not it. So nope. Thank you. So this one's dated. See how it's way back in March? And I want to see the one that came out in June. So they don't have that out there. So yeah, that's unfortunate. Let's see if they have something else I could work off of. All right. So our reports, okay, that's fine. Let's go with the news. Let's news and events. There it was. So our standards, filing and reports. they're a small company, but they should still make it easy for us to get through their financials. They're not making it easy for me to find the financials. Let me give it one more try. I just want to confirm that sales growth because that's going to set everything up. All right. So nothing. All right. So we're going to have to leave that for a later date and trust that what they filed is accurate. So if we believe this sales growth, that looks really good. Going from 43, I mean, they pretty much just took a huge leap forward. And let me look at the news stories around these guys. So what's this story about? Yeah. So what I was complaining about, they're getting a delinquency notice from NASDAQ saying you haven't provided your annual report, your 10K. What I was really struggling to find, they haven't provided it. That's a big problem. Okay. Issuing out your financials, you have to do it. You don't do it, big problems. Because we don't know what's going on. Those numbers, it's just really risky. If you can't report your numbers, that usually means that your business is out of control, and you're going to surprise the market. So this is troublesome for me. I can't like have full confidence in the numbers until I get a set of financial statements. And the reason why I like to look at the financial statements, especially when you're seeing numbers like this, is if they produce financial statements that are fraudulent, like management knew that, hey, we're going to put out some numbers and they are made up. Okay. The officers of that company are personally in a lot of trouble. So that's why I like getting those financials and seeing, okay, there's somebody accountable for these numbers. At this point, they haven't generated financials. So I'm like, man, you guys, I don't know if these numbers are correct, but I cannot proceed. And these numbers, I take that back. These numbers are old. This is January 31st, 2025. So they haven't reported in a long time. So this business is out of control. So January 31st, 2025. Here's January 30th. They're up to 163. All right. I don't have a lot of faith in this business. What's this stock been doing? Yep. Yeah, this one here, just, I'm not taking any of my capital here. Financials aren't being produced. I don't know if I can trust these numbers. 2 analysts cover it. They think it's a decent stock. If they can get like their business organized and they are growing at these rates, this could really go places. But I'm just like amazed that if you are sitting on this type of success, why can't you like organize your business and administer your business properly? And then the market is going to be confident in your numbers. because these are fantastic numbers, but I don't know if I could believe them. So that's where I'm going to end it on IMMR. Sorry that I kind of went through this long search and never got to anything, but I just wanted to make sure I was understanding the situation. Thanks for asking about that. All right, little Jay, what's going on, man? Can you remind me of the flaw you saw in Synopsys? Yeah, it was their free cash flow. When you look at Synopsys, right? So I'm going to try to find a good compare to Synopsys. Synopsys is call it a software company. Okay. They do software that helps a semiconductor company test. Let's pretend that these are my ear pods for my Samsung phone. Let's pretend this is semiconductor. We just designed it and we think it's going to perform at a tremendous level. These guys have a platform that you test that semiconductor in it, and it in fact says, oh, that thing is going to produce this type of performance. Great. That's the software they do. So when we look at a business, it's 72 billion. They dropped really, really harshly. Wow, look at that. Oof. Sometimes the market has no heart. And on the same day, other stocks flew up. Some stocks crashed down. All right. So Synopsys is a software company. Let me try to think, and maybe I can look at my watch list and see. Better yet, let me look at my portfolio and see other technology stocks that I could compare and then show you the difference. Okay, so I'm going to go with, let's go with Intuit. Intuit is a good one. Let's go with, yeah, we're going to go with Intuit. I was thinking of going with AppLovin or even Fortinet. So we're going to go with, let's go with Intuit or Fortinet. Fortinet, I think, is smaller than Intuit. Intuit's like 200 billion. So we're going to compare it to Fortinet. Okay, so why Synopsys is too expensive? Oh, and I didn't save it. Darn. All right, I have to share it here. Okay, so you see that the company $72 billion in market cap. 72 billion. Lock that in, kind of like, okay, 72 billion. Their revenue is 6.4 billion. Okay. And they are slowing down. And I heard somebody else mention that it may be the threat that the US isn't going to allow them to sell into China. There's going to be export restrictions on it. And that might be the story that is probably not helping, probably hurting them. And then when we look at free cash flow, 1.3 billion. So let's compare it against a couple other software companies. $72 billion market cap. So first one up is going to be Fortinet. 60 billion in market cap. That's this $60 billion market cap company has about the same amount of revenue. Free cash flow is higher at 2 billion. So you're getting a company at a lower price, 60 billion with higher free cash flow. Synopsys was at 1.3, Fortinet 2 billion. Fortinet is growing at 14, Synopsys at 8. So you have Synopsys has less cash flow with the same revenue amount as Fortinet. Fortinet's growing faster, already has greater cash flow. So Fortinet's looking like it's a better situation for an investor. you're getting a faster growing business producing higher rates of free cash flow than Synopsys. Second one I'll compare, and we already went over Amazon. Good. Is we're going to go to Intuit. Intuit is going to be bigger, 182 billion, and Synopsys is now 72 billion. Before their big, crash, they were above 100 billion. So this business is 18 billion in revenue. Synopsys 6 billion, growing at 15%. Synopsys growing at 8%. And the free cash flow is 6.1 billion. So Intuit is about 3 times bigger in market cap, but their cash flow is 5 times. So the whole ratio, Intuit is a better situation for an investor. So when we buy companies, we can find a good business, but we have to buy, or I like buying under conditions that provide me a really good discount. And Intuit's a great business, really solid, recession proof. Fortinet, I think, is discounted and a good stock for me to buy into. Synopsys, not so much. And I analyzed this when it was down 20% last night on the live stream. And then I saw 35. I'm like, whoa, talk about a haircut. So these guys are just getting hammered. It's still priced too high. It doesn't produce the cash flow I want. And that's what I saw, little J. All right. So you took a teaser position for 100 shares, and I think you were referring back to AMPX, right? So, man, I hope it works. I hope it really, really does work for you. Little J, thanks, man. I really appreciate that. Yeah, you're welcome. Are you a Manchester United fan? Okay. I use Interactive Broker, but eToro is gaining popularity here. Oh, thanks for the I know, little Jay, you're in UK, right? So I appreciate you saying that. Anybody else in the UK or Europe that's aware of, is Interactive Broker popular versus eToro? Love to hear from you. And I've seen some other requests out there, and just a reminder, if you're a member, I go over stock logo tickers. If you're not a member, a $5 super chat, and then I'll review that stock for you. So those are your options. All right, so Michael Anthony, see your comment there. I think you're referring back to that company I couldn't find their financials on. That is not good. So Liam, how you doing, man? Iran Fortinet is cracked. Maybe. I think it's going to come back. Everybody said the same thing about Zscaler. And man, I made really good return on Zscaler quickly. And I'm thinking Fortinet might do the same for me. So we'll see. This is a good comment here. Wondering about IBM in light of Oracle stuff. Oracle smashed their guidance, right? Ah, Manchester City fan. All right, man. I'll be thinking about you on Sunday. Good luck to Manchester City. So back to IBM, that wouldn't be a bad idea to take a look at, because Oracle just, their guidance is we're going to have tremendous backlog and they're going to do really well. How's IBM doing with their revenues? Not so good. 2.69, 1.44. Are they growing better in the quarter? Yeah, in the quarter it's better. So if they guide that, hey, our cloud infrastructure is going to really, really explode, we got something. But I don't think IBM is in the same class, because it's not like IBM is just totally going all in on AI. I think they're They're doing enough to say, yeah, we can do AI, but I don't think they're going all in. So for IMMR, there's a Barnes& Noble acquisition there. It could be, yeah. It's just really strange and rare not to produce your financials. And if the Nasdaq is sending you warnings that, hey, we need your financials or you'll get delisted, that's really bad. Oh, okay. So Barnes and Noble's had some errors in it. Oof, ugly. If they get it all fixed and maybe it becomes investable in the future. Yeah. So all right, guys, good stuff. Well, really good stream. I am gonna call it there. We covered a lot of good businesses. Thanks for tuning in, everybody. Thanks for the questions on stocks, and I really appreciate it. I'm going to take a 10-minute break between my live stream, and then we're going to have my channel's member call starting. We just have a nice conference call, answer questions, even look at stocks, but we get to talk to one another, and it starts in about 13 minutes. So I'm going to try to go grab a quick bite to eat, and then I'm going to meet members of the channel in about 10 minutes. Thanks so much for tuning in, everybody. And let's see where the market trades tomorrow. I'm going to try to stream in the morning, see what's going on, and see how we can make some money. The market has been rewarding those that are picking the right stocks. And, in some cases like Meta, it's down, but not too much. It's still having a great year. Amazon's really been bid down. Apple has no direction upward. But we'll see. Tomorrow we have big earnings from Adobe. Adobe is the big name tomorrow, and we'll see how they announce. I'm hoping that they really show a lot of growth, especially around AI apps. That'd be really interesting. But I appreciate that so many people joined the live stream. Thanks so much. And I appreciate you guys. And I appreciate the super chats that were put out there. I appreciate it. And everybody have a good night. Good luck with your investments.